Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. And if you go to our website, and if you want to join me and a big group of really amazing traders, click on the subscribe button, scroll down to the live trading room. That's where this is coming from today. And you'll get all kinds of information about the room and how it works. You're going to get every trade that I'm taking throughout the day. You get my entry price, stop price, target price, reasons for the trade, technical chart, updates on the position until I close it. And then if you want to add on the options room, which only does options, right? The live trading room is shares of stocks, ETFs, and every now and then we throw on a micro e-mini trade. Or if you want to do just long calls and puts, then you can add on the live options room for about 40% off the regular price. Okay, let's take a look at the market. So this is the S&P 500, and if you are an active trader, you know exactly what happened on Friday. We had a nice quiet little morning. It was choppy but tight and quite close to all-time highs. And then Trump came out and tweeted that he was having trouble with Z and with China, and he had canceled his meeting that was due to happen in 2 weeks' time. And the market didn't like that at all. It went down, and then it started to stabilize. About halfway down, the big red stick here started to stabilize, and then he came out and said 100% tariffs on all Chinese goods until China gets his act together. And that sent the market tumbling even further. And then he said something else after the bell, and it sent it even further after hours. And then he came out somewhere. I don't know exactly the timing of all this, but somewhere along the way, either on the weekend or late Friday night or Sunday afternoon, he came out and said, kind of like, okay, I over exaggerated, or everything's okay with China, and they're all good people, and yeah, we're going to meet at some point, and those tariffs don't have to go on, and all of that. So it was taco time, and the market's been up since then. Now it gapped up, and it continued higher, a little bit of choppy in the morning, but gapped up, continued higher, and now we're holding at the 21 EMA. That's the blue line right there. And that's probably about as far as we're going to get today. This is a classic reversal bar. It's not the most bullish reversal bar out there. Something like a hammer candle or a doji would be better, but it's inside the range of the previous day. It's holding the gap up, and it is now trading near the highs of the bar, but we are within the range of the previous day. And that usually spells a bottom, right? A near-term bottom is in place or should be in place off of yesterday's lows. Now, here's the thing we have to remember. These sorts of inside day bars after a big slide, because there's now technical damage in the chart, because there are a lot of people who bought up here and they're waiting for the price to get anywhere near their price. And as soon as it does, they're going to sell, 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 sell to get out at either a smaller loss or a break even, because there's overhead supply up there. In other words, it's going to be hard for the market to continue further tomorrow. Now, the market can do whatever it wants. And frankly, if Trump's 100% tariff is just a big bluff, and it seems like it is, like it has happened a dozen times before, then the market should be going back up, because there's really no major change to the overall economy. But there are there's some headwinds here. First of all, the government is still shut down. We don't have the jobs data. It's been really late. We don't know exactly where the jobs situation is at. We've got government employees that are not being paid. That slows down the economy. So yeah, there are still some headwinds. And of course, Trump being Trump, he might come out tomorrow and turn around and say, "Oh, Z's a bad guy, and I'm not going to meet with him ever, and it's 200% tariffs." You just never know. You just never know, right? So, what typically happens when you get a big slide down like this, especially one that was up near the highs, all-time highs, and slid all the way down to erase 2 weeks or so of gains, and then you get the next day, you get a little bump up, right? This is not a little bump up. This is actually a nice 1.5 to 2% bump up that holds the highs of the day and closes inside the range of the previous day. What typically happens is that the next couple of days, you get a little bit. I'm not talking about anything scary, but unless things change in the macro picture, we should get a little bit of back and fill. What do I mean by that? Well, just a little bit of price exploration to the downside. So if we go over to the hourly chart, which is maybe a better picture of what we're looking at here. So here's the big slide on Friday, and this includes also after hours data Friday, where Trump came out and said something the market didn't like, right? Here's a little pause. This is a 1 hour chart, 1 hour of pause. And then Trump, Trump, Trump all the way down. Now, over the weekend, he backpedaled, and then we got the big gap up. Okay, well, here's this gap right here between, I don't know, 60, let's call it 6,600 and 6,625 or so. That will act as support, right? But typically the market wants to come back and test that support just to make sure that, I'm not exactly sure why. This is part of it is the algorithmic trading is programmed to do these kinds of things. Part of it is that those that have been trading for years and years, I've been trading for 23 years, we just know that this is how the market operates. Everybody's expecting it to go right back up again, and the market rarely does what everybody's expecting it to do. And so this is the map that is probably a reasonable expectation for the next couple of days. Let me scroll out a little bit here. So here we have this nice recovery rally, and it'll dip down into some support. Higher high, that's good, right? We kind of want to hold these highs above the 21 EMA on the hourly chart. That would be perfect. But then I think tomorrow we'll probably get some back and fill, maybe a little bit of a trend down. And where is our gap? Our gap is right there. So, oh, come on. Line, gap. Okay, so a little bit of a trend down tomorrow, right? A little bit of a trend down, a little bit of a lower high, and then we hit that gap somewhere on Wednesday morning, and then we start to build a little bit of a base, and then maybe by the time we get out to Thursday, we get back to trending back up higher to the all-time highs. We'll probably be at all-time highs. Not sure if we'll be there on Friday, but I think it's a pretty good chance of that happening, 30-40% perhaps. But early next week, we do have big banks coming out this week with their earnings. That is, it's kind of a concern because we're not exactly sure what banks are looking at in terms of fundamental data because of the government shutdown and so on. And we've had durable goods delayed, we've had jobless claims delayed. We just don't know. So credit ratings have been delayed. So we're going to have to wait to see how the banks respond. I think the big banks will be okay. I think the regional banks are kind of a no-go zone for a little while at least. But the big regional banks the big international banks are the ones that are reporting this week, and I think they'll probably be pretty good. They'll keep some stability in the market. We just don't want them to be a headwind, right? We don't want them to be missing and lowering expectations and crying into their beer over the government shutdown or whatever. We just want them to be uplifting and positive and optimistic about the future. And I think if that happens Thursday, Friday, we're right back up again. Early next week, new all-time highs. Okay, so let me show you, if we go back to the daily chart, some previous instances where we got the big red stick down. Here's a good one. Now, this is not the same kind of day that we had last time, but a big red stick down, right? Scary, two days of heavy selling down into the lower edge of the LRC. We had a big reversal bar. It's not quite a bullish engulfing candle. It's called a bullish piercing candle because it started lower and ended lower, but it's still a nice long green stick. And then the very next day, we got the back and fill that I'm talking about. I think that's probably what we're going to see tomorrow. So we can't get too excited today, especially now that we're up at the 21 EMA. We're up near the highs of the day. I don't think we're going to get any higher. Makes no sense to buy new positions now, except, and I just did this a little bit ago, except as a little starter nibble, right? You put your foot into a position with the expectation of adding shares if we do get the dip tomorrow, add shares tomorrow on the dip, and then you've got a bigger position and you're in a better place to experience the gains. Now, let me show you some other examples. Okay, so here's 4 red sticks in a row. Here's a very big, that's not quite a bullish engulfing candle, but it's as close as it gets. Huge reversal bar. And then you had 1, 2, 3, 4 days of back and fill on that big green stick, right? 4 days where you could have gotten much lower prices than had you bought at the near the close of that day, right? As bullish as that candlestick looks, got to be patient. You got to have this is my big green stick rule. Don't buy the top of a big green stick. You're much more likely to get better prices in the next day or two. And if we go back to this is the big tariff crash, right? And so one of the things we really have to be worried about here, though I don't think the market is worried, and I don't think we should be worried, but you know, this was all-time highs, and then we had a couple of selling days, and then we had a bounce, and then it was all downhill from there, and then we had a relief rally, and then it was all downhill from there. Now that of course is factoring in a lot of things we didn't know about the tariffs, and the tariff percentages kept rising, and the numbers of countries they were applied on kept rising, you know. And Trump came out with his Liberation Day speech, and it was just horrible for the market. Horrible. So we're not in that kind of situation, thankfully, just yet. A lot of the tariff stuff is already behind us. It's really all about China. China is the big whale that we need to land with a good deal that's good for both countries and for trade and for big tech. And we're not there yet. So it is possible. It's very possible, in fact, that this could be the beginning of a 3 to 4 week, 3 to 4 month pullback, but I don't see that happening. There's nothing in the chart that tells me that. There's nothing in the macro that tells me that. And I just don't see anybody in my pro trading group talking about that possibility. So I have to believe that's not on the table. All right, here's another big red stick off of new all-time highs. Here's your little bit of a reversal bar. This one actually did look pretty good for the next 3 or 4 days, but that green bar right there also tested even below the lows of the other day. That's the kind of thing I'm a little bit worried about for tomorrow. And even then, when we had the 3-4 day rally, it came right back down again. Not much of a swing trade possibility there. Here's another red stick. Here's a bit of a reversal bar the next day at the 50 period moving average. And you can see on the third day, the second day after the red stick, the day after the hold, we got a little bit of a lower move, right? Not much, but a little bit of a lower move. Here's something that's maybe a little closer to, no, not quite. This is a 4-day slide. Here's your relief rally. And again, this one actually looks good, right? It keeps traveling north, but look at the intraday movement here. This bar especially got all the way down to the open of 2 days prior, and it's just about at the close of the big red stick. So that's the thing, you know, this back and fill, this algo trading that kicks into gear to close those gaps and to seek the support levels and to do some price exploration typically happens after the kind of action that we've just seen. So just letting you know, that's a possibility. Here's one more big red stick. This one is actually at the tail end of about a month of selling pressure. Here's your reversal, your hold, and then the next day, right back down again. So let's just be careful. We can't get too excited. As nice as it is today to be trading this kind of action today, as opposed to what it was on Friday, where it just was stops out, stop out, stop out, stop out, with a few exceptions. And we had on some nice exceptions actually in both rooms, but with gold and with MP, I forget the name of the company. We had some calls on an MP. Anyway, and then we did a little bit of nibbling, some buying actually. I bought some TQQQ Friday after the close. We had on some gold micro E-mini futures, which sailed right through our price target. We had on BE, which is an energy play that was getting good call flow. That happened on Friday, and it skyrocketed way up today, way past our target price. So, and we're way back above today where we were on Friday at the close. We've made that back and more if you look at both rooms, and that's a good thing, right? When you can bounce back so quickly, it means that not only have you protected your capital on the way down, but you've also found the strongest parts of the market on this bounce back up. And typically, if it's outperforming today, it should be okay if we do a little bit of back and fill tomorrow. Yeah, because that's usually what leaders do. All right, I'm running out of time. I apologize, but I want to go over some of my newly updated greens list. Let's take worst to best here. There's no red on my greens list today. So PLTR, I just nibbled a little bit on PLTR. Why? Because I like the fact that it wasn't very good this morning. Here's your big red stick, but look, it's not down. It's not erasing a month of gains, and it's not undercutting a bunch of lows. It was just some fairly, not so heavy volume um, testing of support lows there, and then it bounced back up. Now, it didn't do very well so far today. It actually came down and it tested Friday's lows, but it did bounce back up nicely. I like that bounce back. And it is PLTR, and usually it's a buy the dip mode at all times. So we'll have to see if it can hold the 21. It was up above the open a little bit earlier. We'll have to see if it can get back up there. We did go long CoreWeave today, and I kind of have to hold my nose to buy shares of this one because I had a lot of fun on this run up here. We had some really nice trades in the live trading room and in the options room too. We had some calls on, and then it just we kept buying the dip. We're thinking, okay, it's going to bounce back. Well, the dip didn't work out. Well, the dip didn't work out. Well, the dip didn't work out. Anyway, and now it's doing this kind of. It is a bullish base. The lows are getting higher. It's bouncing up against a pivot high, which it tried to get up above on Friday, and Friday was a horrible day. So to do that on Friday is a good sign. And it flushed out some range lows this morning, bounced back up again inside the range of Friday. So to me, this looks like better than okay, but not that great just yet. But let's see. We just kind of nibbled on shares, and it is CoreWeave, and it's got a great fundamental story. I think it's going to be a long-term play for us for a while. Here's Facebook. It's printing the inside day bar like a lot of things today. The thing I like about it is that Friday did not take out a whole bunch of the range lows. It held the range lows. We've got a support shelf down here. The LRC is still uptrending. We're down in the pink zone. Buy the pink in an uptrend, sell the blue in a downtrend. That's our LRC mantra. So you could buy it here, but there are better setups in my opinion. Amazon, we have Amazon calls in the live options room, if I'm not mistaken. I'm pretty sure we're still in that one. I don't like what it did on Friday. It was ugly, ugly, ugly. And it broke through a short-term set of trend lows. And that's never a good thing, but it is doing a nice inside day bar. It is green. It is up at the highs. It is in the pink zone of the LRC. The LRC is still uptrending. So, and it's Amazon, right? You've got to figure that this has some legs on the AI front. Interactive brokers. This was from my market leaders scan and over in Market Surge, but it's not really setting up for the. I'm going to take that off. Actually, it's not really setting up very well. LSCC is a semiconductor play. Big slam, big gap up. It's just holding. That's not really what I'm looking for a quick turn trade. I do like this one, right? Strong, strong, strong. Little bit of a soft pullback into the LRC midline. Strong, strong, strong. Little bit of a pullback into the LRC midline. I'm looking for this one to break out. I do not have a position yet, but I'm watching it. Here's the only computing. I hate when the trading view does that. This is the only quantum computing name on my short list, I'm pretty sure. And it's printing a nice bull flag or pennant in a nice, strong momentum uptrend with lots of good volume coming in. This actually looks pretty good. This is the kind of setup I'm looking for right now. We're long a few of these already, not the computing section, but tech stocks that look like this. And I like this setup. We might be long this one before the end of the day. CrowdStrike, we had some calls on in this one. I'm kind of waiting for this cup and handle to break out. And it looks to me, this is a pretty strong volume shelf right here. So it's probably not going to break out this week, maybe next week. But, if you want to kind of build a position in CrowdStrike, I think fundamentally this one should get a nice breakout move before earnings. And then earnings, all bets are off. SOFI, we were long this one. We got stopped out on Friday. It's back up, but above the 21. This is actually looking pretty good. I have to say this is looking better than it did just a little bit ago when I was looking at it. Today's stick was red. Today's stick now is back to green. The only thing I don't like about SOFI here is, it's got some competition, is taking away market share, and B, recent trading has been a little bit on the distributive side rather than the accumulative side, but that can change overnight. Okay, ADI would be a like a recovery play. Strong fundamentals. It's in a very good space. What is it? It's a semiconductor space, but it's like the electronic components that go into the semiconductor or something like that. And it's been weak for a while, but it held above the 200. Big reversal bar today, and the fundamentals and the analyst support and the raising estimates are all supportive of this one going higher. But I'm not long, and I don't think I'm going to get long. This is a gold silver play. We went long this one in the live trading room on this nice looking pullback, right? Had the flush out on Friday. Now, a lot of gold miners were weak on Friday, but not as weak as tech, not as weak as most of the stocks in the market. And it bounced back up nicely today. And this looks to me like it's just ready to bang and break that pullback. Tesla is to me a nibble, but I like what it's doing today. It's up above the 200. The 21 EMA. It's starting to move out of a falling wedge. Tesla's been very, very strong. And then it just kind of petered out, got up into the blue zone, volume shelf, right back down again. That's a pretty big move, right? 470 down to 410 or so. And now bouncing back up again. And it is Tesla. And they've had some pretty decent news. I'm not sure I'd be a holder over earnings with Tesla. The last one, the earnings were great. The market didn't like it. So I'd be worried about earnings. But between now and then, I can see it going higher. We bought some Oracle calls in the live trading room, the live options room this morning. They're off to the races. Nice rounded bottom breakout of the pullback. This is one I don't know, but I like this little, it's a momentum play and it's flagging, right? When a momentum play flags, so the flag pattern is one of the most reliable bullish patterns out there, and it is especially reliable in a strong momentum move like this one. This is huge, right? It was down here at 6 and change, and it got all the way up to 17 something. So that's a huge momentum move. I don't know why. I know nothing about the company. I just like the chart, and I really like what it's doing right here. CELC, I like the company and the chart, but it hasn't. I got stopped out of some experimental shares on Friday. I haven't gotten back in yet, but it is very tight. It is reversing in the pink zone. We did buy some ACHR this morning in the live trading room, or is it the live options room? I think it's the options room actually. And we bought down here around 1240 or so, 1250, and now it's breaking out of this tight. Here's another good example, right? Strong momentum move, huge, from 9 to 13 and change, and then you get the flag pattern. Yeah, I know, not all flag patterns are going to look the same. Some are really wide, some are really narrow, some look more like falling wedges, some look like pennants, but it is the same idea, the same technical idea. Momentum, 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 consolidation. Boom, momentum, momentum, momentum. So we're going to try to play that next leg higher. Oscar, a nice bullish inside day bar. This is the kind of pullback I don't like, which is almost a straight shot down, right? Just relentless selling day after day after day. The one thing I like is that this volume balance down here is not all that heavy. So these are probably newer longs or short-term traders getting out of positions, taking profits, getting scared, whatever. And then it caught today at the midline of the LRC. We're up above the 21. That's a nice looking inside day bar. Again, look out for a little bit of back and fill tomorrow, but this is a good looking short-term setup for a bounce back. I like this one, Laser. This is one of my favorite companies for fundamentals and future growth, and it is shaping up very nicely for a breakout move. We're long Poet in the options room. We bought on a dip, so it was interesting. On Friday, I put in a bid. Maybe it was up here. The stock was up here around 9 something or 8, up in the upper 8s, and the calls that I wanted to buy were trading at like 220. And I said, you know what, guys? Looking at the option chart, which you can do, you can chart options. I noticed that at 150, it just kept coming down to 150 and then bouncing. So I said, I'm going to put in a bid at 150. I don't think it'll hit, but who knows? And then on Friday, it hit. And it hit really close to the lows of the day. So we got in really nicely, and it's bouncing back up nicely for us as well. AMSC, if you're looking for a high quality leading company in the semiconductor space, but this actually is, it's not like a chip maker. It is I think it makes the machines that makes the semiconductor, something like that. Anyway, it is, the fundamentals are great. I talked about this on my IBD Live appearance about three times before. I've been on, I don't know, half a dozen times now. And I really like what it's doing here. This is likely going to break out very, very soon. And then it's right back up to, you know, the mid 70s. And here it is at 61. Pony, this was brought to my attention by a guy in my pro trading group. I don't really know the company, but I know that a lot of folks have been trading it. I like this move. Momentum move, soft pullback. Why do I have this? I don't know why I have this box here, but I do. And it did get into that box and bounce back up out of it. And now we're probably going to fill in this little bit tomorrow. I wouldn't buy it today, but look for a little bit of a lower price tomorrow, maybe something around 21 and a half. OUST, I just nibbled on this one in the live trading room, announced it in the experimental trade section. It's not an official trade. I just did a little nibble. I just wanted to get in before it goes crazy. And it looks to me like it will go crazy. So crazy good is what I mean, right? So you've got this big range forming, and it's really clearly defined with a sequence of slightly lower highs and slightly lower lows. But really what it's doing is it's consolidating a much stronger move that started down here around 6.5 and got all the way up to 35 in just a few weeks, right? OUST is OUST. I'm forgetting what they do, but I know I've did some research on it. And this one looks good. In fact, we're not even an inside day bar. We're above the open on Friday. So this is very strong. I think this is the kind of position that if we do get general back and fill in the market tomorrow, this one won't play along. It'll still stay strong. SERV. So I really like SERV a lot. I got knocked out of it yesterday. I had some shares that I sold up here. So thankfully, it did this huge breakout move. And this is something I did in the live trading room. I sold about half of my shares up there. I put a raise stop on the rest, and they got stopped out. So overall, it was a nice trade, but not that great. And then right back up again today. It's not a buy here. It's certainly a hold, but I would just hang on to this one. There's something good going on in this company that investors are really starting to step up on. All right, guys, I'm already over time. So I'm going to wrap it up here. God bless everybody. Hope that gives you some trading ideas. We'll see you back in the room in just a little bit. Bye for now. God bless.